Guys, sitting on this stage is even a privilege for me. To have such an amazing panel show up for this. I'm truly honored that you came and just, to be a blessing to these people. So thank you so much. So guys, what's going to be happening here is we are going to ask a number of questions just to see what are some of the things that we... thank you. I don't know who doesn't have a mic. Does everyone have a mic? Okay. So we're going to have, some questions for them. And also, as we are doing this, I would encourage you to start writing your questions because we'll take some questions at the end. And basically, this now we're getting into really, we had a session with Monica Mwaniki where we touched on a few things, but we're also going to expound further on a number of things. So as you can see, there's a wealth of experience on this stage. And it would be a pity that you leave here and you've not asked some of the questions that maybe you needed to ask. I always tell people that it's hard to ask a question when somebody is trying to sell you something. You get? When you go and somebody is trying to sell you an insurance policy, they will always answer their question based on their policy. You get that, yeah? But now here, you're asking a question and no one is trying to sell you something. They're trying to give you information. So I hope you take advantage of it. All right. Maybe we start off with a simple question. Where did your love for, sharing about financial knowledge and literacy come from? Like, did you just wake up and say, I need to tell people because they need this knowledge? Maybe just share. Maybe you can start with Reina. I think you've been doing this for quite some time. What made you get into this?
Yeah, I'm doing it because, I've been doing it for quite some time because I'm, I think, way older. But yeah, I think I generally like to share what I learn. It's not so much about the finances because I also talk about parenting. I talk about many things. I'll talk about Jesus. So why money? I think it's been my biggest pain point as an adult. When I started adulting, I've made horrible, shocking mistakes. And so I don't want anyone else to make those mistakes. And so I am an evangelist when it comes to financial planning and investing because of the mistakes I've made myself. Yeah.
Okay. Maybe you want to share one mistake just for the people.
One mistake.
Just because we see you're so well.
Hey, there are many. No, I look well put together, but I still make them even today. The first one that comes to mind, gosh, there's so many. I think the first one was just not planning. And I think I've talked about this so many times. It's just when I got money as a student in university, the plan was, my parents were really young. I mean, how old was my mother? 40 or 39 when they were sending me out to Australia to study. Oh, wow. And so they're like, look, we don't have money to, give you upkeep and pay for everything, but we can give you money for the first 6 months, but after that you need to work and be able to finance your life there. And I said, surely, how hard can it be? So they gave me money for 6 months. And when 4 months were done, I had finished all my money. I ate out every day, didn't plan my money at all. I didn't get a job for nobody. And that's when I realized, okay, actually money gets finished because it just looked like it was so much. Yeah. And then I think I'll give you one more. The second mistake I've made is lending money to a friend.
Wow.
Yeah, that one was painful. I felt sick.
Don't look at your neighbor. Don't look at your neighbor.
Lending money to a friend. Thanks.
All right. Thanks for sharing. Alex?
All right. The reason why I started sharing financial matters was, first, I'm a CPA. I'm also in finance. But I was broke. So broke and so ignorant about the financial sector, and I wondered, now, if this guy is a CPA, you're a financial expert, but you don't know anything about personal finance. You cannot be able to create a personal budget. You have no idea what a money market fund is. What about other people in other professions who never had an idea of what money is? So that elicited that conversation in me. And when I was starting to create now my foundation to make money work for me, I found out, why don't I share this information with other people, especially professionals? Yeah, that's where I started.
Did you also make mistakes?
Oh yes. The first mistake is kujirudishia mwili shukran, you know? Total 100. Really, I think it's very important, but you overdo it. You know the concept of paying myself first? Unafikiria, paying myself first is going somewhere and enjoying that money. Yeah, you work so hard for that money. So that is a mistake, because by the end of it, you're living paycheck to paycheck and you don't have anything to show for it. The second one is investing. I lost around 2 million. Chua, where did I invest? In a leading company. You know how much they can get, eh? Leading is very recruitive. So an investor came and approached me. We are starting a leading company. So, and you can be an investor. And we enjoyed good returns for the first 6 months. Then COVID happened. Money went off. Then there was a system hacking where they lost a lot of money. And I lost that money. So that's also a mistake. But the mistake is not investing, because that's a high-risk, high-return venture. The mistake was I had ignored building other things first. And went to invest in high-risk investment. I had not laid out my foundation before I go to that investment. I did not have an emergency fund. I did not have any protection, that is insurance, for protection of that investment. So I went straight on 2 million. I wanted to multiply. And even the interest that I'm getting, narudishia mwili shukran. So by the end of it, I had nothing to show for it. Yeah.
Wow, thank you so much. Pauline?
All right. For me, my journey began when I was a young girl. I admired going to the bank, especially with my parents. And I would love, how the bankers look, and, they look so neat and nice. And I developed an interest in the banking, but I wasn't clear, is it commercial banking or is it investment banking? I actually didn't know there was a difference then. Fast forward, went to university, did a program that I never practiced. I did development studies, but my first job was in a bank. And so I didn't practice that at all. Then I moved from the commercial bank and I found myself in an investment bank. And that's where my journey began. And I interacted with a lot of investors from when I was very, very at a younger age. And I would see, a lot of people coming in to make investments, but they really don't know why they are doing it. I didn't do anything about it at that point. So I continued on doing my job through and through, and also learning how this field looks like. Because I was in an institution that was very intentional in training and retraining and upskilling the staff members, so that if you do not have a background in investment and banking, whereas you're working in the institution, you get to be equipped with that knowledge. So that helped me. So fast forward, I left the bank, the investment bank, and it is at that point, which is about 7 years ago, that I realized that there are people who need the knowledge that I was carrying with me. I had a wealth of knowledge of 13 years. In the morning, Pauline said, when you get into your institution and you're thinking 60 years, or you're thinking that is where you retire. For me, I think I became so comfortable because I was doing what I loved doing at that point. And so when I left is when I began the journey of speaking about money. Speaking about, the basics. Where do we begin? And where did I start it? I started it with at my family level before I went out. And then after that, I went to many other social spaces just to speak about it. Another thing is common with the rest of my colleagues here is the money mistakes. I made very many money mistakes. Despite being in the investment industry, I will tell you I lost a lot of money in the same industry where I was working. I bought shares and sat back, and I'm comfortable. Yes, I'm making money for my clients, but for myself, I am not making the money. Why? Sometimes because you're interacting, I think, with these systems day in, day out, and you can see how the market is performing, then you're not very careful to do, I think it's fear or something like that. So I found myself losing. I think there's one time I lost about 2 million shillings through stocks. Then another big money mistake is a friend to my mom introduced me to a Desi. I don't know whether there's anyone who remembers.
Those are wounds.
So you can imagine I am still in the same industry and I'm making those foolish mistakes. Mm. And it hit me hard. I have to do something for myself, and not only for me, but also for others, to benefit others. And now I'm glad I am back into this industry just to continue furthering this position.
Wow. Thank you so much for sharing, guys. Do you want to hear my mistake? Yes. So, if you insist. So, when I got my first job, you're told put some money aside to save, right? But I didn't know how to save. So my friend tells me, I didn't even know what a SACCO was. You're told, come, we have a company SACCO, sign up. And you're told, do, so you do. Then you start saving. Then this guy realizes this guy has been in the SACCO for over a year and he's never taken a loan. Just what we heard about Monica talking about, right? So the guy comes to me, he's like, hey, bros, my brother, you need to take a loan, all right? So this guy was very well calculated. Like he had seen what the value of my deposits were, and he knew what loan I could access. So he says, you need to take a loan immediately. So I'm like, okay, I take a loan. Hey, how much can I get? He tells me about 500,000. I'm like, oh, really? Okay, sour. Then, now, I'm like, so what am I going to do with this money? Guess what? The same guy comes. Now there's land being sold. There's land being sold. So I'm like, okay, these are answered prayer investments immediately. So land being sold where? Joska. Kamulu Joska. Then he gives me the proposal the way the airport, iko tu tayari. The airport, the road has been marked. In fact, there's a university coming up immediately. This land will be hot cake. Like you'll get your money in 3 years. So who am I? I buy this property without ever seeing it. Yeah, it's a mistake, guys. Don't say, oh. So I bought it. Now, after some time, I'm like, but I've never seen this place. Let me go and see it. Then, where I'm parking the car, because I'm now meeting the guy, is like, okay, there's a petrol station for Total, park your car there, I come meet you. And I'm like, okay, kumbe ni karibu na barabara. So I park there, then he comes with a border, now we go. Where we went, you're just doing this. I thought there was a road. Which road? We are going like this. You reach the property, you're like, wow. Even if there was an airport coming here, guys, surely. The value of that land, we are now in 2025. It has not yet doubled. It has not yet doubled. I would have done so much with that, money. I've done so much with that money if I knew what I know now. So there are so many mistakes that we make, and we never do them because we want to. It's just that because we don't have avenues where we talk to people and we get to know better. So that is the whole agenda of this summit and bringing people like this to share. So that you see we're also human, we also make mistakes. None of us is perfect. All right, so let's jump right in, okay? So the first question, because of time, I'll just ask a few of you. So maybe let me ask Alex, what does investing with a purpose mean for you?
All right, before I answer that, let me take it this way. In the area that we are in, most people want investment. They want to invest, right? The question is usually, Alex, I have 3 million shillings. Where can I invest this money? And my question is usually, why do you need to invest? Then they get confused, but I want money. I want more money. Money for what? So there is a pause after that. Okay. I think it's education, but also I haven't done anything about my retirement. So we start there. The problem is not the investment. It has never been. In fact, if you have money here, by the time you hit that door, Rina and Paul in here, they are going to have given you the best investment vehicles available. But it doesn't matter. If you put that money there without knowing the definite purpose, probably you're going to deposit once, then after next week, you withdraw it, when a trip Dubai. Mnakurudishia mwili pole. You know? So, investing with a purpose is investing with a mission, with a definite why. Why do I need to put this money there? Why do I want my money to grow? Is it to take my children to a school? And when you get to the school, what type of a school? How much will you be paying for that school fees? You have to have definite goal. If it's retirement, how much do you want to retire with? If it's 50 million, now we start from there, right? So we come back. 50 million, for me to get 50 million, how much do I need to contribute every month, right? Okay, I can only afford 50,000 or 30,000. Then the next question would be, this 50,000 for it to give you 50 million, what type of a return do you need? Probably some will now get there. You want 50 million from 50,000 and you don't want to take any risk. So I want very safe investment with maximum return. That one does not exist.
You're shouting.
You're
shouting.
The higher the return, the higher the risk. Or the higher the risk, the higher the potential. Because you can lose everything. Or you can go home happy. So we start there. So what is your risk level? We have identified the purpose. And we have identified your ability. Now we want to see how can your money grow. Then we identify what is your risk. Do I go to a special fund, oak fund? Can you be able to take probably that risk? Kuna ingine wanasikia oak fund. No. If you put money somewhere and you are likely to develop high blood pressure along the way, don't. Do I go to stocks? No, I cannot be able to hold that appetite for stock. So you identify the different vehicles in the industry based on your risk appetite. And risk appetite will be formed by where you are financially. Yeah? There are people who can invest 10 million and they are ready to lose it. Why? Because 10 million is 10% of their portfolio. If 10 million is all you have, you'll not start by going to cryptocurrency, right? You'll start by basics, then scale up, right? Or just take part of that portion to invest. So, investing with a purpose. You must have a very definite goal. If you don't have a definite goal, open a money market fund, park your money there, it's growing well, then think about it. Come to Alex or go to your financial advisor. Now start working on your purpose. As your money is working for you, so that now you can take it to the next level. Yeah.
Thank you, Alex. I like what you said because most of the time we don't start with where we want to end up. We start with how much can I make? All right. So when you start with how much can I make, you're doomed for disaster, because none of us wants to make the least returns, of course. So if someone tells you start a side hustle that gives you 2,000 bob per week, you'll be like, that's a waste of time. You want something that gives you 20 or even 30,000 per day. Sindio, that's more attractive, yeah? But then the one who makes the 2,000 per week consistently will be much far off 10 years down the line than you who is still waiting for that 30,000 per day. So it's very important that you start with the end in mind and then you pick one that works for you. Maybe Rina can ask you, what role does faith, ethics, or personal values play in shaping your investment strategy?
Yeah. Maybe, can I make a comment about purposeful investing?
Please.
I think it's just a sentence I want to make. Investing that is purposeful starts with me, the individual. Not with what markets are doing, not where interest rates are. It is where am I as an individual? What are my personal circumstances? What do I have? What do I need? What are my goals? It doesn't matter whether everybody is going this way or the other. I have to form a plan, and a whole plan based on everything that I need to get done that is for me. So my portfolio will not look like Alex's at all, or like yours. It can't, because my needs, my goals, my personal circumstances are so different. So it just means me creating a plan that is based on me and my family. Faith and values. I think I was looking for a scripture, but it is okay. Your values it's your compass. The things that you hold as your core values guide your every decision. The decision to pay money to sit in this room, or the decision to go to the gym, or to wake up on a Saturday and decide to go back to bed and watch Netflix the whole day, that decision is based on your core values. And so one of the things that make people wonder, okay, so how does that relate with money decisions? I'll give you an example. If your core value, let's say, is family, and you get an opportunity to work in the UK earning 5 million a month, and you have 3 boys aged 5, 7, and 10, will you go? So if your core value for real is family, you'll not go. But there are many people who go because their real core value is not family. They just like to say it is family, but their core value is perhaps growth, wealth, or money, moving to that next level. So you actually see your real core value by the choices you're making every day. So if my core value is family, there are many things that I will do that people will not understand. For instance, I might decide I will take a job that will enable me to be home by 4:30 every day, so that I do my evening with my children, I know how they are doing, or I'll switch off my phone on Saturday evening and not be on my computer until Monday morning because of that. So money is directly related to your core values in the choices of investments that you make, in how you invest and how you work and how you spend your time as well. Now, it goes even as far as deciding the kind of companies that you invest in. I'm currently working to bring in a fund here in Kenya. Soon, we shall be trading in an exchange-traded fund called Timothy Plan. So if you just go online, look at Timothy Plan. What they do, and I'm not selling, by the way, I'm just giving information. What Timothy Plan does is invest in S&P 500 companies, but screens them for companies that fund abortion, LGBTQ, alcohol and drugs, and those sorts of things. So any companies that are within the S&P 500 that promote any of these sins, or I don't know what to call them, that things that are not considered kosher, are removed from that screen. What's been interesting to see over the years is that despite the fact that they have removed these companies that are so-called stars, they've actually done fairly well in comparison and in line with the actual S&P 500. And so it's possible to invest in line with your goals, but also in line with your values and what you believe in, and still make money. So it's about making decisions not based on money, because money becomes your idol. It's interesting, Jesus didn't say, you cannot worship two masters, God and the devil. Did he say that? He said you cannot serve two masters, God and money. Money has the ability to take us over completely. That every decision that we make is guided not by God, but by money. Where we will live, where we will work, how we'll spend time with our family, how we'll spend time with our children. It can be very sad. So I think that's really what it's about, just answering your question. Thank you.
Wow. Those of you who thought about the job in UK, nawaona. All right. So Pauline, for someone just starting out, what are the first 3 steps to building a solid investment portfolio?
All right. What we have been saying here is about first understanding why you're doing it. So even as you're starting off, you need to go back and ask yourself those hard questions. And once you're able to identify the reason, the key, when we say when your why is strong enough, it helps you to make those decisions. So for someone who is starting, once you understand your why, then you ask yourself, then, where do I begin? What does that mean? You need now to assess where are you at in life, so that you know which investments do you go for. Because if you're starting off, you start, from, what is affordable for you and what you can manage at that. Because we are all at different life stages and we are all at different financial life cycles. So understanding where you are at helps you a great way in being able to know what works for you. Because if we say that you need to understand your hard. What is your heart at that moment? Now start building your financial plan from that. What does that mean? Do you have a budget in the first place? I know these are things we keep talking about, but they're very important. Just understanding this is what comes in. So do you even know how much that comes in? Whether you're in employment and you have something on the side, or you're in self-employment, just knowing these are my sources of income and this is what I get. Some people get a monthly, some weekly, but what works for you? But you really need to know how much comes in. Now you will ask yourself in the budgeting process, what are these expenses that you have? And you have to be very authentic with yourself and get to the bottom of every big and small expense. So you create your financial plan. Then once you do your financial plan, then you ask yourself, what do you want? Do you want growth? Do you want liquidity? Do you want stability? And that helps you in the choice of investment that you want. If it is liquidity, maybe you go for something like a money market fund. You create your emergency fund, your sinking fund that will help you to keep going as you're building towards your other investments that will give you growth and stability. There are many people in the market who can help you be able to craft that, the financial coaches, the investment companies that we have, but you really have to start from where you are at and what is working for you. I think for me, when I was starting my investment journey, like I said, I began in the investment banking world. And my first thing, because this was a conversation every day, was creating that emergency fund. It looked like it is not something that is important, but I remember one of my colleagues lost their job, and I saw the turnaround that happened in their life. And that's when reality hit me. I need to put my finances in order. I need to begin with that very basic, which is my emergency fund. And it helped me a big deal. Even when I was going into the desis and the other things and the other plots that we have. There's a plot I went to buy, just like you have in Konabaridi. I don't know whether there's anyone who has heard of Konabaridi. So whoever was taking us, the real estate company that was taking us, took us when it was a dry season. Very dry. But as we were in that project, and it was to start the greenhouse, I don't know who remembers that craze of the greenhouse.
A plot and a greenhouse, something for development.
The minor ones, those ones, yeah. So there were projects that were ongoing in Konabaridi at that particular point. But as we were getting there, I could see, where you see a river pass, you can always tell, especially if you grew up in the village like I did, you can tell where a river passes. So I went and, in my wisdom at that point, took a plot in that and invested in the greenhouse project. And the rains came. And one day I told these gentlemen who had taken me to this project, let's go and assess what is happening. Because we had done some tomatoes and some other vegetables, and we could not get to the land.
It was flooded.
Because there was a big river in between where the project was. So we had been promised a market for our products. And asking about the products, we were told, the person who was doing the contract farming, that company shut down. And so the tomatoes wasted in the greenhouse. We were to own the land after the project. And so they say, because it was contract farming, the owner of the land needed the land back.
Okay.
Yes, so no land, no return, no nothing, and there's a river somewhere that you cannot do anything with that land. Yeah, so back to what I was saying is to understand where you are, just also to do due diligence with the investments that you're making. Know what it is that put some time to invest in knowledge in what you're investing in is very, very important. I can give very many other examples, but in the interest of time, let me end it there.
Wow, she raises such an important point, because most of the time, who do we get our investment advice from? It's usually our friends, our family. How many of you have been sold for policies by your cousin or uncle? How many of you have invested in a land because you're in a chama and somebody saw something and you just put in land, you put in money there? We usually get, our investing is based on emotions most of the time. So it's good that she's saying these steps are important. Do your due diligence, have an emergency fund in place, and it's important to know what you can handle. Because sometimes we put in all our eggs in one place and we hope for the best. Maybe I can throw back to Rina this question. How should investors think about diversification in today's market?
Great question, but I want to take a few steps back because I feel like diversification is so advanced. I'm sorry. I think we need to keep it simple. Because, I've been in the industry for 22 years, and the challenge I find is not diversification. The problem I find is management of the money that you have. So even what Pauline said is it's so important. And if you don't mind, let's just dwell there for just 2 minutes.
Sure.
When she's saying know where you're at, really it's, do you know how much you earn? Do you know how much you spend? Do you know how much you owe? Do you know how much you own, where it is? Like your land, right? How much I bought shares. I can't remember the broker I used. And I don't remember the price. That's the problem. So you can't create a strategy of diversification if you don't know those 4 things. If I'm in debt and I'm paying 45% per annum because it's a credit card loan, I have no business investing. Because I don't know any investment opportunity that can give me 45% return. So I'm actually investing by first paying off that debt. I have full lizard, I have credit card debt, I don't know which Shylock I've borrowed from, plus my loan from my office and my desk mate. I first need to sort those out, and then I can meaningfully invest, and I will end up peacefully investing and diversifying. So I think it starts with, and I'll get to answer your question. I just felt it's important for us to first understand where am I at? How much do I earn? and where's the gap between where I need to be in terms of my goal and what I have now in terms of my assets. A lot of times, because I coach a lot of people as well, I realize people don't take time to keep a record of what they have, what they own, how much they bought it at. What's my plan when I retire? How much will I need when I retire? Just even the knowledge of, okay, I have 4 big expenses in my life: education, healthcare, either for myself or my parents, a home, and retirement. If I'm not thinking about those things now, imagine 30 years comes like this. And so I have to think, if I'm thinking about diversification, I'm thinking, yes, I'm not putting all my eggs in one basket, as people say, because I want to be able to afford these different key core things in my life and sustainably. So it's, by the way, wealth creation is a very boring, consistent process. It's the same thing guys do over, and there's nothing exciting about it. I don't know, crypto, what me? I've never seen anyone who's wealthy. 10 people who've invested in exciting things, and they consistently create wealth. Most of these these one-day wonders come and go. But the people who've created wealth over years, decades and decades, it's very boring stuff. Budgeting, how much am I putting aside every month, and basic things. So why do we diversify? Just to answer your question, we diversify so that then you don't invest in this one thing, like I'm going to buy Safaricom shares. And because I've seen the price move from 12 shillings to 28. And so I buy Safaricom shares and then the prices come down. So I put my money in different things for different reasons. One, the purpose is I want safety. I think Alex talked about it. I want to be able to have an emergency fund. So I don't put my money in stocks if it's an emergency fund. I put my money in something that is safe, that I know I will get my money back as it is when I am withdrawing my money. I then need to be able to grow my money above the rate of inflation. So where can I invest it so that I can do that? And so I look at various opportunities, and I may not just choose, if it's stocks that I decide to do, I'll choose some that are safe and boring and give me a good dividend, and some that might be a little bit more exciting that can give me more growth through capital gains. And then of course, I have to make sure I have a pension. So where can I get a pension from? I need insurance as well. So I'm making sure that I'm covering my risks, but also giving my portfolio the opportunity to give me real returns. I don't have to invest in every single thing that exists on this planet. It's just to choose 2, 3, 5 things that make sense for me and for my goals and what I'm trying to do. I don't need to sound clever because I've invested in Ripple and Cardano and Bitcoin and have made I don't know what. The guys who make it big, it is just this slow and steady. Ecclesiastes, is it 9:11 or 11:9? I don't know. The race doesn't belong to the swift. It's not those who are swift who make it at the end of the day. It's not those who know everything that make it at the end of the day. Those who have a lot sometimes end up with none. Those who have none end up with a lot. But time and chance come for all of us. So I think it's just really about being faithful with what you have been given in your hand. Yes, I'm earning this. I can save 10,000. That's great. By the way, God blesses the faithfulness you have with that 10 Gs. And you'll find, because you have that 10 Gs and are faithful with it, more will come, and you'll find opportunities to be able to then invest and in different things, and also invest in knowledge so that you understand what are the different opportunities that exist, how do they work, and which one will make sense for me now. Thank you.
Wow, thank you. I hope who needs a second notebook? Ziko available. All right, Alex, what percentage of one's income should be dedicated towards investments? And does it need to shift over time?
Thank you for that. How many minutes do I have?
You can summarize, but...
I summarize, because I wanted to give the audience a structure they can use.
Okay.
One thing that we are facing, before I even answer that question, is everything is scattered. We don't know where to start and where to head. Yeah? You have all this knowledge, you know the investments that are available, you know what you should do, but the question is always, where do I start? She has indicated the 3 things you need to do first. Elena has also highlighted things that are there, but how do you structure all this before you even get to the investment? Because in fact, investment is the last part. you can write this down. If you don't tell your money where to go, you'll always wonder where it went. If you wonder where it went, forget about investment. That was a stupid me. I told you. Money is coming in, exiting, you have no idea. Yeah, it's 15th. Where did my money go? That is the first step. And we call that AKA budget. Tell every coin where to go. That is where you are going to allocate everything else. Right? The second one is debt. She has said that the highest ignorance is when you have a credit card from a bank that you are paying 23%, and you are inboxing me and Rina asking, which is the highest paying money market fund? Or you want to invest in a 13% return investment. It's a zero-sum game, right? The biggest, remember, loans or debt is the inverse of an investment. It's only that it is an investment to the bank or to the lender. They are getting the return and you are paying it. So you have to know how to use good debt and bad debt. Avoid bad debt. Bad debt is consumption. Probably the reason why you took the credit card was to attend to an emergency fund, right? Third thing, those are two things. Third thing is create your emergency fund. An emergency fund is an investment protection fund. If you skip that step and invest, then an emergency happens, what will happen?
You liquidate your investment.
You're going to liquidate your investment and you are back to zero. When you liquidate an investment or when you take out something, what do? You disrupt one of the greatest world building factor called what? Compound interest. So by the end of the year, you wonder, hey, I thought I am an investor. I can't see anything because you keep on putting in and withdrawing. With an emergency fund, it shields your investment such that you forget about the investment and your investment start growing. Right? We are at number 3. Now we are going to 4. I usually call it a safety vote. They say that we are just one step away from poverty if we get an emergency, a medical emergency. Yeah? Most of us probably we have a corporate medical insurance, but some don't have medical insurance. And you are there investing, buying land, investing in, crypto, forex, special fund, equity. If you get admitted for just 1 month, or a member of your family gets admitted for 1 month, all these things, you're going to sell that land at a throwaway price. You're going to liquidate everything to pay that. You're back at level what? You would have paid that medical insurance for just probably 100,000 or 60,000 or even 30, depending on what policy you are taking. Having an inpatient medical. That is what matters most. No one can be able to raise 2 million or 500,000 in 1 week's time. Right? Then we go to what? The other one is legacy planning. I think there's someone who will tell us about that. Protecting your family. All this world that we are creating depends on the future. If you want to create a good inheritance that protect your children, protect your family in your absence, you take a what? An insurance. We're talking about protection. A whole life insurance. Why? If you pass on and you are the only breadwinner for your family, you leave them exposed, right? So you take care of that. The other thing, number what? 6, education planning. Rina indicated that education is one of the most expensive money affairs that you'll ever have. In fact, if you don't get it right, and you go taking your children to schools that you cannot afford, your retirement is doomed, your wealth creation is doomed. That's an error that you are making. So structure an education plan. Start paying for it so that when your children will be getting to college, you have money to pay for that. You are not going to disrupt your retirement, right? The other thing, think about this pillar, now retirement. We say that we are 87% of us are disgruntled by our job, right? We are working for what? Even when we are working for that money, that paycheck is going to stop. And when it stops, remember, you're on your own. You don't have anywhere to get an income. So there's someone who said, you tell me who this person was. If you don't get your money to work for you when you are asleep, or when you don't have the energy to do so, you'll work until what? When you die. That is the default. If you don't prepare for your retirement, by default, you'll work until you die, right? So we want to avoid that. We plan for that. After that, you ask yourself, what is left? Through budgeting, step number 1. Now we go to wealth creation. That is where the investment comes in, right? So that is where we are thinking about the investment. Now we are back to the question. Remind me what the question was.
I think you've already answered it.
I've answered
Just that
it,
you've not even a percentage, but I love that. I love that because you're giving us a structure of what remains and what needs to be covered before you invest. I like that because, there are so many rules out here. For example, the most common 50-30-20, right? Now, it would not make sense for you to invest the 20 if you have a lot of debt, for example. So it's not a one formula fits all. And then also, if you are able to invest more than the 20, don't be limited by the 20. Sometimes we focus on what works best for us. If I get to have more money to play around with, I'll rely on the formula that says 20. So I'll do the 20. But when I see it's not working for me, then I'm like, these things don't work. So I like exactly, you actually answered the question.
Amazing.
Yes.
And I can also add that.
Yes, add.
Now, in that structure, you have identified a few things where money is involved. Savings and investment. One was what? Your education. That requires constant investment to that fund. The other one was retirement. That's also require constant deposit in your pension. The last one was investment, right? The pure wealth creation. Now, you identify these goals and then see, based on that structure, how much can I be able to afford? Some probably will not have the 20% or even 10%. The reason why we don't have the 10 or 20% is because we started structuring our lifestyle before a financial structure, before the 7 pillars that I've given you. So you are paying rent that you cannot afford. Why? Because you thought, I have enough money. But you did not know, I'm not taking care of my retirement, I'm not taking care of my education. So when you're going to RINA to seek financial advice, because you need to invest 20%, you're doing calculation, the math is not mathing. All your money has gone to your lifestyle. Because you started, you put the cart before the horse, right? So by the time you are coming to restructure, it will require you either to eliminate some of the lifestyle expense, or like you, if you are starting. Because if you are starting, you can now create a good financial foundation, then ensure that all these areas are covered, and probably you have over 20% of your income going into saving and investment.
Wow. There's a lot of stuff coming out of here. All right. Pauline, I think you've partly answered this, but I still want us to just look at it. There are different asset classes that are there, and we've talked about how even investing is evolving. How do you balance between the risk element, but also trying to chase your goals? How do you balance that?
All right. I think it also builds to what Rina had said about the diversification, because when you're looking at when you're doing your financial assessment and looking at the different investment classes, it helps you now to create the diversification. We spoke about the different asset classes that we have. And I think Monica had also spoken about that in what we were listening earlier on. You know, you can think of the bonds, which is a fixed income as an asset class. You can look at the stocks, which is what we call equities as an asset class. And this is buying of shares in the stock market, which you can do either directly in the stock market or you can do through a fund. You know, there are different fund managers who, you know, have packaged different solutions into one. So you don't really have to keep chasing to see how the market is performing. And I was having a conversation with someone yesterday, and they were saying, but the stock market is doing very well, and there's somebody who has been talking about it in the recent past. I don't know whether it is right to mention the person who's been talking about it, but I will not mention. But you go listen and see Kenya Power Shares, Kenya Re. Yes, but for you as an investor, you need to ask yourself deeper questions beyond what you're hearing. And I'm pointing this because I spent a lot of time in the stock market in the investment bank, and I know what that means. For you just going blindly into buying stocks without an understanding. Yes, it is a great asset class to have in your portfolio, but it needs a lot of understanding, the technical understanding of it. What does it mean when I invest in Kenya Power Shares? Does it even serve that goal that I'm saying that will add into my portfolio at the end of the day? The other asset class you can think of is what we talked about, the alternative solutions, is the cryptos, you know, the virtual money assets and all that. And to get there, because it is a high risk, really high risk, we said assess your risk appetite. Some of us have very high risk appetite and we lose a lot because of that. Others, their risk appetite is just low. You know, you just want to be comfortable with what you have, and you are sure about the investments you're getting into. So there's the fixed income as an asset class, there's the bonds as an asset class, and there's the different alternative solutions that are there. And a lot of fund managers are offering very good solutions that are speaking into these alternative solutions. So that is how you assess your risk appetite and assess which asset class do you go to, and as you speak into your financial goals that you want to achieve at the end of the day. And I think Rina and Alex have spoken something very important. In this room right now, if you to ask ourselves, you know, what is our net worth, so that you can also know how to work from that point. Everything that you have and everything that you owe, including the debts and everything, what remains of you, and then you can know how to allocate that.
Thank you so much. One question that I want to ask now to all three of you is, say you have some money. Say we have, each one of you have 1 million. I'm very generous, I give everyone 1 million. So all three of you have 1 million. Where are you going to invest your money in today's market? And because we've been talking about having an end in mind, let's say we want to retire. We are planning to retire maybe in the next 20 years. What are some of the things you'd look at, or what strategies would you use for this 1 million so that you grow it to the level where you want to reach? So I'd leave it to you, up to you to say, what's your goal with it? Like, what's your ending point, so that you can talk about how to get there?
Before I answer, my answer is based on my situation.
Yes.
So it's not advice for anyone. In fact, Rewa, who's here? Who is Rewa? Oh, she stepped out. We've already had this conversation, by the way. So there's, I will not say who it is because I am recording this. So I don't want it to be out in the...
Okay.
But there's somebody in my life that I want to sort out because I know the time is coming when I will need to sort them out. And there's a fantastic opportunity that I have already participated in. And so I want to do this for that person. Okay. This 1 million is actually exactly what I need. And what I want to do for them is to buy what is called a deferred annuity. They are now 38 years old, and I've already calculated this so that when they're 60, this particular investment, as it is this year, is growing by about 12.4% per annum. It's by an insurance company in the market. And how it's working is that, you know what an immediate annuity? Okay, let me just a few steps back.
Baby steps.
Have you heard of pension? Okay, so you pay pension every month. If you work, you can decide to get an individual pension, and you put some money aside every single month, yes? Now, you can decide to do it as an individual, or your company does it for you. And then when you get to retirement age, whenever you decide to retire, you get a lump sum. So what some people do, they might opt to take that lump sum and put it into what is called an annuity, and it's called an immediate annuity. So what happens at that point in time is when you get this money, and I'll get to your answer. When I get this money at that time is I will sign a contract with an insurance company to sign for an annuity that they'll do their calculations and see, okay, you have 10 million shillings that you've saved over your life. We can give you 100,000 every single month until the day you die. That's an annuity. Now, this one I'm talking about is not that one. This one is deferred, meaning I'm 38 years old. I'm not 38, but this person is 38 years old. When they get to 60, that's 22 years, they will receive an amount of money. Now, when I did my math, for 1 million shillings, it will be 145,000 for them every single month to the day they die. So immediately, I'm like, oh my gosh, I don't need to wait until they stop working. And then I have to pay all this, whatever. How about I work towards, and if you give me that money, by the way, that's what I'll do. Because I will sort out this burden I feel right now for this person, because it's a goal. I want to be able to do this for them. And so I know that when they get to 60, they will earn 140,000, 45,000 every single month to the day they die. Yeah. So that's what I'll do.
Wow. I like that. Have you thought about your answer?
That's what I was thinking about. What is my age?
You are... Oh, give me a number, guys. How old does he look? 38?
Oh, at 38. By then, I'm 38.
All right.
So if I receive 1 million, and this is for retirement, that option, very, very nice, very good option. It also gives me a chance to take more risks. We are assuming I have structured my finances the way we have structured it, and I'm only concerned about retirement. So an annuity is a great way, deferred annuity. You put it to grow, then after you hit 60, you start getting your money. But I would take more risk because I have done all the foundation. Probably I would invest in a special fund. Right? This 1 million, I would invest in a special fund that is giving me an average of 20%. Remember, I have a pension already running, right? And I have education already running. So probably I would invest in a special fund. But if I think that is of more risk, I would separate. Probably invest into special fund, or one, I buy a fixed income fund. Moderate risk, still growing at an average level of 15% return. So those are the financial assets that I would execute. Yeah, two.
All right, thank you. And these are their own personal opinions. So please, don't come tell us next year you guys lied to us. Huh? All right. Yes.
All right. For me, at the age where I am at, you give me 1 million shillings. I'm thinking stability.
Okay.
So I will go for a solution that is giving me stability. And when I speak about stability, I'm also thinking my retirement. And interesting what Rina has said, I just put some money in a deferred annuity for my own self. What you were saying, that sometimes you get advice from your friends, and I had not thought about my pension from my previous employers. And so I went back to where I had previously worked and consolidated the pension, and I put it in a deferred annuity. And when I project how much that will give me, I would say that I'll be happy with what I'll be receiving at that point. But that's not the only solution that I'll have. I'll build a portfolio with bonds, because remember I said I'm looking for stability.
Yes.
So anything that is giving me a rate that is above also the inflation, that's a consideration I would make. But yes, that is what I am working on personally, because I'm at that stage of my life, and that stage, life cycle and financial life cycle, that is speaking to my stability.
All right, thank you so much. Final question before we come now to your questions. How do we develop habits that keep us disciplined? I think that's where most of us struggle in terms of, yes, I hear you, but I just can't put money aside every month. How can we help this person? What are some of the tricks that maybe you have from experience with past clients? Yeah. Anyone can start? Yeah.
Alex, tell us first.
Okay. Now, what are habits? Habits is what we call behavior. That is what we see. But where does habits come from? Where do habits come from? From what Rina stated, beliefs, and then belief forms the values that you have. And where does your belief come from?
Your environment.
Your environment, your experiences. So we start from my experience with money when I was growing up. Then that created a belief in me so that I can project it as this is what I value. Then from values, you behave. One thing that I usually say, the first thing that you need to do is face yourself on the mirror. Because the person you see, the problem is never the money. That person. Probably your behaviors based on your values and beliefs. Tumesikia kitu inaitwa financial trauma. Yeah? Which starts from low self-confidence. That can ruin your money. You want to impress people so that you look valuable. You have low self-esteem. It can disrupt all your income. You buy 25,000, 30,000 suits, iPhone 15, right? You want to go for holiday. Oh, 16. I'm behind. You want to buy the new Mercedes, right? Who are you doing all these things for? Not for you, for people. You want to take your children to an international school so that your friend can talk about it. Not for them, but for me. It starts from you. If you don't understand yourself, it means you'll be spending money to impress people who don't even care about you. Then you'll abandon the things that matters. Like your retirement, giving, building a legacy, taking care of yourself, and living just a basic life. So if you don't face yourself, first, no structure will help. You're going to dismantle all the structures. One of the things that people talk about is doing, what is it? You go to the bank, instruct them, money is coming, a standing order. If you don't understand yourself, you are still going to stop it. That emergency fund that you are saving,
Can we
you're going to eat it.
Shouting. Just joking.
right? So it starts from you. Take time to look yourself in the mirror. Understand who you are. What are my values, right? Do I live the life is this life mine? Or it belongs to someone else?
Maybe I can just give a practical example because I completely hear you and I totally agree. I think it begins with your identity. So I turned 40 and I sat with a group of friends of mine that I call, no, it's a long time ago, by the way. Somebody's clapping for me. Thank you. And so I sat with a group of friends of mine and we agreed, we called each other destiny helpers. So we said, okay, before you come for this meeting, think through what are the things you want to be able to do and have achieved by the time you get to 50. And so one of the things that I wrote, there were several, but one of the things I wrote was I want to be strong. Cardio has never been an issue for me, but strength training and all of that is something that I struggled with. And then also consistency where working out is concerned. So we agreed and I shared this with my husband. So a few weeks and months into this journey, I wake up groggily. I'm going to the bathroom and my husband stands in front of me and he looks at me straight in the eye and he goes, do you know why you're struggling with this journey of working out? I was just like, oh God, here we go again. So to put it into context again, my husband is an athlete. He played rugby for Kenya. So he has no challenge working out every day, Sunday to Sunday. So I'm like, okay, why? So he says it's because of how you see yourself. I'm like, what do you mean? So he says to me, you don't see yourself as an athlete. Because if you saw yourself as an athlete, you would behave like one. Yeah. You would eat like one, you would wake up like one, you would work out like one. And so then he proceeded to send me a video to watch. And I was just like, oh my God. Like, it's true. And I started to call myself an athlete. And I said, imagine I'm an athlete. I told my friends, I am an athlete. And I kept repeating, I am an athlete. And so because I am an athlete, guys, I wake up at a certain time. I swim now twice a week at 5 a.m., 4:50, I'm at the poolside. Twice a week, I'm working out. I have a gym instructor who comes to my house to help me with this journey because I am a athlete. So guess what? I am an investor. And investors are curious people. Investors study what is happening. They know what's going on in the financial world. Because if you're not an investor, you will not invest. So what is your identity? And the beauty about this thing is that even if you've lived your life a certain way, it doesn't mean that it is over. Your identity can change over time. It evolves. Your identity evolves. So who are you?
Ish. Wow, I think that deserves Pauline?
Right. For me, I will speak about what has helped me. I'm still in the journey, but what has helped me. And one of the key things I did was to unlearn some money myths that I had. Growing up, I would hear stories like, when you ask for something, like, money does not grow on trees. Money is the root of evil. All evil. All. Yes. And I grew up in a very deep Christian family. And I had that. Maybe not directly, but I had it indirectly. And I somehow carried that with me. And I have shared my many money mistakes. And I think some of them were informed because of these perceptions I had carried with me. Until I had to call myself out. And ask, how is it that I have the knowledge, but yet I am still doing these mistakes over and over again? And it hit me, wait, I have to unlearn some of the belief systems that I was holding in me. And I removed that mask. The way you're saying you look at yourself in the mirror, I actually did that. And it was a painful process. But it helped me to develop small baby steps towards the growth of understanding my money journey and the mindset that I need to carry with me to be able to achieve the results that I want to achieve. And sitting down with myself and asking those hard questions. Why am I going to get a plot in Konabaridi? What is it for? You know, just because 3 or 4 of my friends had told me it is a good investment and we do it. But was it serving my purpose? No, it wasn't. It was serving the purpose of someone else. Why should I get into the other scheme that I had mentioned about? Why? Because I hear you are making, the money is multiplying 3 times. You are saying you get 3 times what you have invested in, all those kind of stories. So I went through a journey of unlearning and relearning and being very practical and asking myself, where am I at in life? This is where I am at. This is what can work for me. And slowly that has really helped to shape my journey. And even as I'm having financial conversations with the people around my space, that is where we begin. We first to ask ourselves those very hard questions. Yes, you can automate, which I recommend for those, automating your savings and all those kind of things, but the mindset has to shift.
Wow. I love that. So what were standing orders? It's not the only solution, right? There are still other things you need to implement apart from that. All right, ladies and gentlemen, we can take a few questions.
Okay. First of all, thank you so much. This has been an amazing session. I think I speak for everyone in the room. The wealth of knowledge you've shared, God bless you. That's amazing. So here's my question, and this one is it's a crossroads of faith, because I hear a lot of faith mentioned. But let me give some background first. So I grew up in a single income family. My dad was the only one working. He was the breadwinner. And so my mom stayed home with us, raised us, took care of the home, all of it. But the times we live in right now are very different. It's very hard for families to survive on a single income. That's just the reality. And there's also a pressure, especially on men, to do so much more. And so when I hear discussions about values, especially where family is involved, where you have to choose between money and the pursuit of investments and wealth and family and lifestyle, I have to ask myself, as a man, what does that mean for me? Because yes, scripture says, yes, those things, and I agree with you, Rina, but scripture also says a good man leaves an inheritance for his children and children's children. And so where is that red line? Where do I actively pursue investments and wealth generation and creation and preservation, and also take care of my obligations as a husband, as a father, to my family?
What options do we have for education planning? My husband and I have really tried to figure that out. And one of the things we've been warned against is taking education policies from insurance companies. But the question is, what other options do we have for that? Yeah, to guarantee that if I lose my job or something happens, that the kids, they're continuing school and that type of thing.
I like the practical advice of get out of debt, life savings, etc., budget. Fine, you've done that. You're like, now I'm an investor. Where do I find resources? Where do I start reading about these are the investment vehicles I can use? This is how they work, etc. Right? So, if you can answer that, like go here, that would be great. Second question is a moral one, especially if you come from a low-income family. Then you've been lucky enough maybe to do a little bit better. How do you think about moral black tax? And this means it's not the day-to-day nisaidia hit. It's when you're fine, you have insurance, your sibling doesn't. When they fall sick, how far do you stop helping? Okay, your mother's brother has fallen sick, right? So how do you deal with that? Where are the limits of hapa ndio nitafika, and how do you think about it morally, psychologically. Yeah, thanks.
My people. Anyone would like to take a shot at the first question?
Well, I understand the question, and I understand the question as this, and so I'll repeat the question so that I see that I understood it. That for our parents, it was easy for mom to be present, and perhaps even dad to be present, mom to stay home and look after the kids, but today it's not practical. We have to both work. And so the question is, how practical is it for us to just say that I will take a job? Maybe even I can't find a job in Kenya, so I have to go abroad and do work elsewhere, so that then I can provide for my family. I think every single family has to sit down and figure this one out, because I firmly believe that my call as a mother or as a parent is first to my children. So what does that look like? It's not, yes, there's provision. And for a man, I know it's different, okay? So the pressure for a man is different. So allow me to just answer as who I know I am. Is my children, my family are my first priority. And so if I'm being called to do work in another country, then can I take my children with me? Or how can I create boundaries around my time to enable me to spend time with these kids so that then it's not that I am a totally absent parent? Because guess what? All this money I'm making, I will spend it in rehab. I will spend it in counseling. I will spend it on myself, on counseling, because of dealing with teens and young adults who are frustrating my life. And so I think that while, yes, you're right, we are meant to leave an inheritance for our children, but that inheritance actually, first of all, is faith, values, ways of living, principles, before it comes to money. So how do you take care of your obligations and maintain your values? I don't see them as opposing each other. I think it's possible to do both. It's possible to do both. I completely believe that it is possible for us to find ways to find work or to make business work and still parent and be present. Yes, it might not be every day at 4:00, but we can say every Saturday and Sunday, I do nothing else but spend time with my children. Or every Sunday, if it's the only day that is available. But it is important, even for fathers. The second thing I want to say is this. Fathers, you are not alone. And this thing of having a wife who just sits down and expects you to provide everything is not on. Okay? She's a helper. She needs to understand we don't have money. She needs to know I am in debt. Not, we need a fridge and it has appeared. Oh, I need to go on holiday and it has come. No, can we sit down and discuss finances together so that we both are clear, this vitu kwa ground, this is what it looks like. So we cannot do certain things. Now we need to plan together so that we are of the same mind and we are aligned around where our finances are, what our goals are, and where we want to go. Because otherwise, you receive pressure from your wife, from your children, from your parents, from relatives, because they see you work. And yet we need to actually be honest and just be authentic about really, this is where I am, guys, and this is how we're going to have to live as a result of that reality. Yeah.
Wow. Anyone else want to add anything, or we can move to the next one?
Maybe just something kidogo.
Yeah,
on the same. I think also building systems around that, systems that will work for your family. Single income, maybe one is working like a day job or is in a business that is consuming a lot of time, but then there's also a family system that you've created that even the other spouse, could be the man or the woman, who is staying home to take care of the children, have a skill that they can still utilize to bring in something when they're still taking care of the family. And this could be the man and could be either the wife. So it's sitting down in that planning and asking what system works for us so that we are able, yes, to grow and bring an ecosystem in this family that serves our values, but at the same time, it's serving our financial obligations.
Men life is difficult. Vitu kwa ground ni ngumu. right? And let me tell you, earlier, our mothers, I come from the village, there's a popular belief that they were doing nothing, they were housewives. That was the biggest economic production in that homestead. They are a farm manager, they're in charge of cows, they're in charge of chickens, cats, and the whole system. Typically, they are the manager. So the model that these mothers were not working, they were just stay at home, is erroneous. And we cannot build that foundation into the present future. So when a wife stays at home, probably, let me first highlight that. The period where you get your children until they are now independent, they can go to school, you don't need to be at home. It's just probably maximum 10 years or 7 years, right? 7 years.
Depending on the number of children.
Right?
Depending.
So it means your wife is not supposed to remain at home forever. It's just a period. So you can go defensive. Defensive is what? Okay, currently, you have to be at home to raise our children. That is work on itself, right? But what we can do, we are going to adjust our lifestyle to accommodate my income. Because we cannot want a lifestyle that I cannot afford, and I'm carrying the burden alone. That is the defensive. Let's work with what we have. After all this season, we are going to go to the next level. That brings less, stress to a man, right? So I just wanted to highlight the defensive part. Yeah.
And the man said, all right, we'll quickly go to the second. There's a question here by the gentleman about the tax, the black tax part. Maybe you can answer as well.
I know we've talked about budgets, and he was like, yeah, you've talked about budgets, but there's a reality. But we can't do it like that because the budget caters for that. So this is my view. And you're very right. Our context is we're in Africa. Our context is we need to support our family in some instances because some family members are not able to support themselves. When you actually sit down and do the numbers, and I don't know what this would look like for you, it may not even be 5% of your income, by the way, every month. So my suggestion is we all should budget for our giving. So that then we know every month I can give up to, for example, 10% of my income, or I can give maybe 20,000 every month towards whatever comes. So that if it's my 10% or my 5%, whatever I've decided I'm giving comes to that 20,000, when it's finished, it's finished. So I can also decide who I'm giving. I know, like for me, I'm put in WhatsApp groups sometimes. In fact, I had to change my settings because I find myself in fundraisers, sometimes 3 at a time, for medical, for funeral. And it's not a bad thing, but I can't give to everyone. And then some of them, they write the name and the amount. Now you will see guys giving 50,000, 30,000. Then you see my name, Rina Hicks, 3,000. There's pressure. How can I give 3,000 and everyone else is at 15, 50, 20? So we have a culture that is, first of all, just a bit off. Let guys give what they can afford to give. There's no point of putting amounts there. But anyway, the point is, put a budget. It's a strategy. So the pressure is intentional. So yeah, I think that we need to decide how much can I give based on how much I earn, how much I spend, what can I put in my giving budget and stick towards that. With regard to family, it's important to just have the conversations. Okay, my dear brother, you don't have insurance and you might fall sick. Do we all have insurance? No, we don't have insurance. How can we plan for insurance? Munyindo taught me something. Munyindo is coming up. By the way, please talk about it when you come, about how this other community does this thing. Because it's important for us to be very intentional and deliberate about the reality of we will fall sick. So when we do fall sick, by the way, my sister, do you have insurance? No, I don't. Okay, how are we going to handle that? So for us in my extended family, what we've done is we have insurance for inpatient and ensure that everybody has it, so that then should something happen, then we are not scrambling and wondering how is it going to work. How do we sit down and think through it, perhaps even contribute together, those who are able, so that we're working on this thing together. I think the biggest issue with black tax is we don't talk about it, we feel pressure, there's unspoken expectations, and then I feel these expectations that I'm not even sure what they are, and so I find myself having to give all the time. I think let's put it out in the open. Let's have a meeting, discuss what is the plan. When mom falls sick, what are we going to do? When this happens, when the cow's worker has not been paid, who is the one to manage this situation? So I think let's talk about the potential circumstances happening, have a budget and stick to it in terms of this is the amount I can give. If it goes beyond that, then you don't have the money to give. And then don't let money just sit in your account. You have 1 million shillings in a current account every month, just sitting looking at you like this. It will find legs. So invest your money as quickly as possible so that you have 30,000. You know what I mean? Like you don't have money. So when you're saying I don't have, and you know it's true, you're not lying. It's not there.
I think because of time, I think we'll end it there. Guys, let's just give an applause to our amazing panel. Thank you so much. And please, you can also visit their stands outside. If you have any other burning questions, please feel free to interact with them after. All right, back to you.